Hello. Hello, everyone. Welcome to FOW Asia. Oh, hello, everyone. Welcome to FOW Japan. I'm Joyty of Global Investor Group. Following Matty's keynote speech and JPX fireside chat, our next panel will gather leading industry players to discuss further the growth potential of commodity and derivatives trading in and out of Japan. Moderating the panel, I'm delighted to welcome Ms. Chika Nakamura, Executive Director, Head of Commercial of ABN AMRO Clearing Tokyo Company Limited. Chika has over 20 years of experience in derivative business globally. She worked in Chicago, London, Singapore, and now in Tokyo. She's also the chair of the Market Development Committee of FOW Japan. To discuss this topic, Chika is joined by our distinguished panelists from JPX, JBMA, Tullett, Prebon, and August Media. Today, we're not only to hear from our speakers, but also we'd like to hear from you. So we encourage you to ask questions throughout the sessions via the Q&A function on your screen. So please note that every session is being recorded and will be available on demand. Now I'd like to hand over to Chika to get the panel started. Chika, over to you.
Thank you, Joy. Okay. As noted by the keynote speech made by Mr. Takayama and the fireside chat we just had in the previous session, power products are certainly the hot topic in the market right now. There's certainly a trend in the society to protect this environment by reducing the plastic usage and targeting the carbon neutrality by 2050 in accordance to the Paris Agreement. Considering the social trends and the regulatory environment, what would be the potential growth in and out of Japan in the commodity and derivatives trading? We'd like to find some clues by panel discussion amongst the specialists in various sectors in this field. The panelists in this session, Joy introduced, but I'm giving briefly the name, title, and the company name. Mr. Tobias Davis, Head of LNG at Tullett, Prebon, Asia. Mr. David Hanna, General Manager of Japan at August Media. Mr. Bruce Ikemizu, Chief Director at JBMA, and Mr. Akira Tagaya, Executive Director at Osaka Exchange JPX. The first question I'd like to ask to those panelists is about electricity. Japan is actually one of the largest electricity user in the world. The spot market has been active since early 2000, and Tocom launched the electricity futures last year. How's the market valued in Japanese industry and society? Who are actually trading and who should be participating to enrich the market activities? Tobias, would you like to share your views and opinions, please?
Sure. Thanks, Chika, and thank you to FOW Japan for the opportunity to speak with you all today. Yeah, I think it's a very notable topic that is gathering a lot of attention at present. It's the development of the Japanese power market. Since full deregulation in 2016, we've seen a significant uptick in sort of spot bilateral flow or balancing of Japanese power trading through the JAPEX mechanism. And then with the listing of Tocom futures back in 2019, as well as the EEX futures, we've seen definitely a slow but a progressive increase in both trading activity in Japanese power and interest from counterparties both domestically and abroad. To your point, how's the market valuing or how is the industry valuing the development of this market and be it society as a whole? I think I'll leave Tagaya-san to talk a bit more about the societal impacts, but in a broad sense, whenever you see such a significant market like that of Japanese power deregulate like it has, You see an influx of retail energy providers that come to market and provide an alternative energy solution for households and C&I customers specifically. So, having the ability to hedge or a mechanism to allow a retailer to mitigate and manage risk in the power sector is really key to the development of any long-standing deregulated power market. So, over the past 4 years, we've seen a very large shift from the incumbents to some of these independent retailers within those demand sectors. Therefore, having the ability to manage some of this risk and provide a best price to customers is one of the key factors to the development of this power market. So the actors involved not just these retailers, but also some of the IPPs, the independent power producers, some of obviously the big incumbent generators, be it gas or related product or related fuel generators, and how they still effectively compete in this market, protect margin, and also generate power into the grid at what is essentially becoming a more transparent market with a lot more actors and players. So, who should be participating? The pool is still very small. You would anticipate that pool to grow over the years as people become more comfortable with a more transparent and clear price, affecting both, spot and forward values for Japanese power, with the intention of ensuring that there's best price, there's fair competition, and that all relevant actors can participate, in a free and open market.
Thank you very much. Tagaya-san, from exchange perspective, Tobias explained from investor and provider point of view. Could you share your view from the exchange point of view, especially around the society impact?
Yes, thank you very much, Chika-san, and thank you very much for giving me the opportunity to speak about our market in this FOW Japan. Thank you very much. And I'm Akira Tagaya from JPX. And before talking about electricity futures, please allow me to give a brief explanation about our organization and the relationship between JPX, OSE, and TOCOM. So I think there's people who are not familiar with this organization. And firstly, JPX, Japan Exchange Group, is the holding company that owns financial infrastructure such as exchanges and clearing houses. And yes, OSE, Osaka Exchange, is a financial derivative exchange under JPX. And its main products, Nikkei 225 futures, Topix futures, and JGB futures are one of the most liquid and the most actively traded financial products in APAC region. And also TOCOM, Tokyo Commodity Exchange, is a commodity derivative exchange. And JPX acquired TOCOM 2 years ago, in 2019. And OSE and TOCOMs, both exchange are the derivative exchange under the JPX, but so they are separated as legal entities, but we operate them on the same trading platform, right? And last year, in July 2020, we transferred some commodity products such as precious metal, rubber, and agricultural products from TOCOM to OSE, so that investors can trade these products in the same account as Nikkei 225 futures. So I will touch on this. I will touch on detailed background later, but now TOCOM is now operated the energy market, such as Dubai crude oil and electricity futures, and will handle LNG futures in next year, right? So that's an explanation about our organization. And so go back to the electricity futures, right? And yes, as introduced, we TOCOM launched electricity futures market 2 years ago. And the currently trading volume, average monthly trading volume has been 100 to 200 gigawatt hour, and it's more than doubled from last year. So it's successfully growing. And the open interest has also been steadily growing to 400 gigawatt hour. And currently, so we have 111 trading members. And among 111 electric power companies, 95 electric companies are there, and also 8 overseas traders companies entering, and other trading companies also participating in this market. And currently, TOCOM's, the importance of the TOCOM's electricity future market has received widespread attention because the unprecedented surge in wholesale electricity prices in the beginning of this year has raised strong awareness of the need of hedge electricity prices. Since through the regulation of electricity retail business in 2016, more than 700 companies came in power market. And most of these new entrants rely on the wholesale power market, the so-called JEPX. This is not our exchange, Japan Electric Power Exchange, for much of their power procurement. Then, in January this year, JPX spot prices soared to unprecedented levels, 10 to 15 times higher than previous year, due to severe winter and the fuel constraints. This price hike has resulted in huge losses for many power retailers. Consequently, the need for price hedging in futures market was recognized, and the participation of electricity retailers in the TOCOM market has been accelerated. Then, so as I said earlier, the number of participants have doubled to 111 currently. And I'd like to touch on another point, the challenge for us. The biggest challenge for us is to secure power generation companies or natural short hedgers as sell-side players. In Japan, incumbent utilities and its subsidiaries own about 3/4 of the power generation capacity. And if they were to enter the market, the size of the market would expand dozens of times. There are several issues that they need to address in order to participate in the futures market, such as a hedge accounting. But another reason is that one-stop hedging environment where power and fuel prices can be hedged at a time on the same platform has not been in place yet. So we will launch the LNG futures next year and April next year. Then, so we can prepare one-stop hedging environment at that time. Okay, that thinking. Thank you. Back to Chika-san.
Perhaps Chika-san, if it's okay, I can make a quick comment based on what we heard just now. I think just to add one kind of comment, which is that I think the role that the retail power players are playing in the market is very significant. As was mentioned, the overall liquidity in the market has increased since deregulation took place in 2016. It's increased by an order of magnitude over 10-fold. But what's interesting is if you look inside this figure, the share of so-called PPSs or Shindenryoku, these new power producers in Japan, that's ballooned from just 7% to about 25% of the overall population. And this is significant. This has implications for hedging needs because, as was mentioned, there are on the order of 700 of these retail players. The vast majority of them are relatively new to power trading. So you have the likes of mobile phone service providers, insurance companies, people in the traditional service sectors, in addition to your traditional utilities that have jumped into this market as a way of enhancing their portfolio. For these people, the concepts of hedging are relatively new. So I think, clearly there's a lot of educational work going on in terms of raising the awareness of the need for hedging and the mechanics of hedging in this very volatile industry. And also, as was mentioned, very important point that when we had this huge spike in prices back in January, a lot of these PPSs were caught flat-footed because they were unhedged. So I think going forward, although I think it's safe to say that traditionally the attitude in Japan towards hedging has been fairly conservative, it's been kind of regarded as a form of speculation as opposed to hedging. That is slowly changing. And so going forward, I think the kinds of financial instruments that TOCOM, EX and others offer are going to be welcomed and widely used in the market. From the perspective of looking outside of Japan Japan is actually one of these rare cases where you have a market that's deregulated and open to international participation. So we have a lot of foreign players who have a strong interest in Japan coming in, looking to participate first in the paper market, but also a bit in the physical market. And at Argus, we've actually had people come to us asking if we could start coverage for the international community of the domestic market. So we recently launched a product called the JUM Argus Japan Utility Markets Report. But the point is that, yes, I think all eyes are focused on Japan as a very interesting case study on how deregulation in Asia takes place. Just a thought there. Thank you.
Thank you, David. Thank you, Tagaya. I'm sorry, I was on mute, so I couldn't comment. Okay, touched upon this market structure and the regulation and the price spike. Is Japan market ready to have price volatility in commodities? How do we mitigate the risk of unexpected price spikes like we had in January? I think that would be our most concern from the user point of view. Do you have any opinions? Tobias, can you go back to Tobias, please?
Look, commodity price risk, Japan has been dealing with since day dot, just like every other country. From importing oil related cross-barrel products, coal and the like, price spikes and price volatility is a part of doing business in the global market. And now we're seeing the impact of that on a micro scale. So with withstanding this winter or previous winter rather, being prepared to mitigate and manage procurement of energy is a critical factor for all nations, especially Japan, who have no natural resources or essentially none. So, price volatility in commodity markets has been around since day dot and isn't going anywhere. So managing that from a macro scale is critical for any country, any utility, any generator. And then honing in more micro scale, looking at Japan, product of deregulation, and looking even closer to last winter, and I dare say right now, looking at fuel prices and the impact of this heightened volatility is really becoming quite acute. So, to Tagaya's point previously, the requirement and the necessity to hedge is really bringing forth this requirement or need for a functioning or a highly functioning futures market to provide that ability. So, price volatility in today's market, unfortunately, is very acute, and in the very immediate term, it looks like it's here to stay, which is a function of many different macro factors, something that we can perhaps talk about later. But yeah, look, this is a market. markets change and markets move. It's just a matter of being set up and being dynamic to be able to handle those shifts.
If I may just add a comment, I fully agree with Tobias's thought that volatility is here to stay. This is the new norm. I think price volatility. In particular, there are two factors to consider behind this increased volatility. One is the fact that among these 700 or so new retail power providers that Tagaya-san alluded to earlier, the vast majority of them don't have their own power generation facilities. So what that means is they have to jump into the market in order to match supply with demand. They're going to be more active, that creates more liquidity, and you're going to have more volatility as a result. The other factor to consider is that a lot of these new players are in the renewable space. And as we all know, renewables like solar, wind, they're notoriously variable, hard to predict. So they're also going to be having a strong incentive to join into the dip into the spot market on a more frequent basis. All of this translates into greater price volatility in the future. And of course, that means there's greater need for to hedge against that unexpected price volatility through futures contracts.
Thank you very much. So the volatility might give some trading opportunities in the different players. Do you see any trading, what would be the recommended or any trading opportunities related to commodities you could share? Bruce, can you give some of your experience to and share with us, please?
Sure. Yeah, sure. Thank you, Chika-san. Well, my name is Bruce. I'm from JBMA, Japan Bullion Market Association. I'm on the precious metals side, and I was kind of very much impressed by those electricity market. I mean, volatilities and everything. I would say in Japanese precious metals market is one of the very best well hedged, I would say, market in the world, because we have a very long time. I mean, very long time established market, because Tocom had started like 1981 gold contracts. So people, I mean, who are using the gold naturally hedges. They understand the fluctuation, I mean, the risks of the price fluctuation, and they are very well hedged. So it doesn't, that kind of huge movement doesn't really happen so often. So I think the situation is very much different. But sometimes, like last year in March, the CMEs, I mean EFB, I mean the premium over the spot market went from a couple of dollars to $70 one time, and that was really never happened in history before. But that kind of thing happens here. I mean, this ages of uncertainty, and which in turn, I mean, from the trader's perspective, which is a very huge chance to make billions of money. And there's a very good chance. I mean, maybe I would speak about this arbitrage opportunities later on, but from traders or brokers' perspective, there's a very quite nice, very good chances to make very good profit on the arbitrage business among the exchanges here, like OSE against CME or OSE against Shanghai gold futures. I mean, Shanghai futures market, So I was just go back to the electricity. I'm really, reading the articles and everything. Those newly come out, like 700 new people, haven't really done any hedging on their exposure. Was a bit surprise to me, but they learned it very hard way, I guess.
Okay, thank you for sharing your view. From exchange perspective, how do you promote, the hedging opportunities in the exchange? And what would be the next from exchange point of view as making the market available to all the necessary people and who are interested in to participate? Tagaya-san, can you share your view on this?
Yes, yes, we think that it is very important to learn about the risk management. And yes, as an exchange, OSC and TOCOM are providing the education opportunity how to use a futures market, how to hedge the risk they have. Yes, and to a corporation and so to the potential participant, market participants, such as industry, potential participants. So, for example, so we, as I said, so many new power retailers came into the our TOCOM market, the TOCOM electricity market, and then so we are also have an educating opportunity to how to use futures as well, and this kind of activity is very, very important to get appropriate knowledge to the risk management. Thank you.
Thank you, Tagaya-san. And also listen up more products would be one of the factors to have hedging opportunities and trading arbitrage opportunities. And you mentioned about LNG. For the last 5 years of development, how this companies adapting to the commodities of LNG? Is this only hedging and arbitrage opportunities? Is there any related financial products going forward? Tobias, do you have any trends in the markets? Is there any ETF related trading? Any sort of trend in the market do you see? Tobias?
Sure. I mean, if we look at the LNG picture, it sits quite nicely from a timing perspective, working alongside recent deregulation in power. LNG is fast becoming a commoditized market. It's traditionally been a very point-to-point market, where gas is shipped from point A to point B, back and forth year on year. But over the past 5 to 8 years, the emergence of a healthy spot market, which has created arbitrage opportunities, which has created optimization opportunities for end users, traders, market participants, and the like, driven by multiple supply sources and demand centers across the globe. So we've really seen this acceleration in commoditization in LNG, which has been utilized extensively by utilities in Europe to trading houses based in Asia and US producers as well. And in all this mix, we've got to remember that perhaps not this year, but up until year to date, Japan has been the largest buyer of LNG, purchasing upwards of 80 million tons in a 350 to 400 million ton market, as gas is anywhere between 30 to 45% of Japanese baseload. It's a very critical part of baseload generation in Japan. So traditionally, the procurement of LNG in Japan has been very much a long-term contract, point-to-point, buying LNG on a 20-year oil slope indexation, which has been sort of with some sort of risk management tools embedded within the indexation. So it's kind of been fairly, I wouldn't say smooth, but it's been a very standardized product for so many years. But now we have an environment where oil and gas, we've seen a big divergence in the price of oil and gas, and they're trading very separately. And then we have Japan buying US LNG on a Henry Hub indexation, so they're suddenly short Henry Hub through a tolling agreement. They're buying oil indexed deals out of Australia, and then they're trading within Asia on a JKM index. So in a very short period of time, this is the way in which Japan is having to procure and or optimize their LNG procurement has changed dramatically. So this evolution has brought it to life, this JKM future, which trades very actively now, anywhere between 8 and 15 cargoes of volume a day, which, relative to the global LNG market is anywhere between 25 and 30% of the market. So the emergence of this spot futures market is starting to bring more questions to the table. And that is, if you're a Japanese gas importer or LNG importer and you're buying LNG from Australia, the US, perhaps in the Pacific somewhere on all these different price indexations, and for some reason you might be short 1 month and therefore you need to go to the global market to increase your inventory and cover that short position, or perhaps you're long and you need to actually dispose of some excess LNG. Traditionally it just would have been a process of swapping cargoes, which is a very inefficient way of managing risk. So all these new tools that are now available to the market, specifically Japan, I think has accelerated this discussion domestically, where we need to just look at things a little more proactively. And this is still the start. LNG is still on this commoditization cycle. Japan, from 2022 to 2024 has a significant amount of long-term contracts that need to be renegotiated. So I dare say the conversation, as Tagaya and actually Bruce, you mentioned as well, if we look at the emergence of power and the emergence of these indexations, and be it arbitrage opportunities, how are these guys going to procure LNG? There's different factors that are going to play into this discussion, and the biggest factor now is going to be the Japanese power. How does the power price going to impact the LNG price, and how are we going to look at spark spreads, and all these relative components and boxes are starting to come together, which again makes it a very fascinating and interesting place to be. And it's up to Tagaya and myself and people like Bruce and David, as well as at Argus, is to educate the market to understand how to manage this process.
Thank you, Tobias. Do you see the same view, or can you share any views? David, please.
Sure, yeah. I completely agree with Tobias about the trend towards spot. We've seen over the past year a shift in Japan, where spot trade accounted for anywhere from 20 to 30% of the total volume imported, to about 40% last year. The thing is, though, that was partly a function of the fact that we were in a cyclically low price period last year. And so now that we're seeing these huge spikes in prices now, there's a lot of talk in the market of people shifting back away from spot, away from fixed pricing to term pricing. And although definitely the spot component is getting more and more important overall, I think it's safe to say that Japanese LNG prices are, at least in terms of percentage of deals done, still oil linked. They're linked to JCC. So in terms of hedging that underlying physical risk with paper, that's often done by hedging on Brent or JCC swaps themselves. So it's, I would say, moving in the direction of pricing LNG based on outright LNG prices, but there's still a very heavy linkage to crude oil, which I think will be here for quite a while to come.
Thank you very much. For the commodity trading, the exchange is listing quite a bit of products and actively trading, but do you see more trading OTC or exchange? And if to increase the exchange trading, what would be the improvement we are looking for? Tobias, can you share from your investors' point of view, your customers' point of view?
Yeah, I think, from an LNG perspective and a power perspective, let's look at power. You have multiple different venues. You have the physical power market, which has been around for a very long period of time, and that will trade in many different guises, across multiple different counterparts across Japan. Then we have, token futures. We have an EX price. There's multiple different venues. So how in which, and then in LNG, for example, you know, to David's point, there's a lot of oil indexation hedging going on. We now have JKM, which is a financially settled swap. Then you have TTF in Europe, which is a physically settled gas future. So again, all these different components, and where do those liquidity pools live? Prior to the great financial crisis in 2008, everything was done physically through an ISDA contract and delivered and transacted bilaterally, either through a broker or just picking up the phone. And then, you know, post GFC and the credit risks associated with derivatives, you know, the exchanges really started to pick up a lot of that slack, which obviously provides an element of protection when trading derivatives. So, you know, a lot more flow is then being attracted to the exchanges, and that's a global phenomenon. That's not normal. So, in Japan, you know, you do see a growing physical market, which is actually very healthy. We really need to see a strong physical market because it really underpins the futures contract and allows for the physical players to come in and manage their future relative to physical risk or the basis risk between the two. So, you know, where those trading pockets and liquidity pools will emerge, we hope to see a strong physical market. We hope to see a strong paper market. You know, whether that all, you know, comes through brokers, whether that's done directly between two counterparts, whether it goes directly through a screen in an exchange. You know, we're still in early days in Japan. Depends how all these pools will develop. I'm sure Tagaya-san will definitely have some more to add to that.
Yeah, Tagaya-san, can you share your view from the exchange perspective and how to attract more participants? And do you expect retail clients to trade on the product as well? Can you share the view, please?
Yeah, I don't have not a lot of things to add, but yeah, but I don't know. Yes, so various type of investors is needed to develop exchange trading. So we'd like to attract various type of investors, such as international professional traders, and also natural hedgers, and also yes, Japanese domestic retail is also important, and then so global arbitrages very important, and then so we would like to attract those investors, those various type of investors by making our market more attractive. That's what we are thinking. Thank you.
Okay, thank you, Tagaya-san. And going back to sustainability and the environment protection, the carbon neutrality, that's the also kind of topic we want to touch on. Tagaya-san, do you have any sort of idea to list up carbon trading on JPX?
Yeah. So yes. So I'd like to share the information, latest situation in Japan. Okay. Yes. About yes. While carbon trading is already underway around the world with a growing sense of crisis about global warming, the movement in Japan had been quite slow. However, now we can see the milestone for full-scale introduction. Biggest change, the biggest driver for this was that Suga administration declared carbon neutrality in 2050 and set concrete and ambitious greenhouse gas reduction targets in 2030. Currently, the Japanese government is formulating an energy basic plan based on this policy and the several action plans in various fields. And the progress has also been made in the implementation of carbon trading. METI, Ministry of Economic and Trade and Industries, plans to establish a framework for carbon credit trading among Japanese pioneering companies in 2022, next year, a so-called carbon neutral top lead. This is a mechanism in which pioneering companies set their own emission reduction targets as of 2030. And if they achieve a reduction above the target, they can sell the excess amounts as credit to other companies. And if they cannot achieve the target, they have to purchase it from other companies. This is a similar framework to the cap and trade mechanism used in other countries, and we hope that it will be the beginning of full-scale emission trading in Japan. Then, so in response to these movements, JPX believes that it will be able to utilize our own market-related management know-how and technology. And then, so we are exchanging opinions with relevant parties to contribute to the realization of a carbon-free society. Okay, that's what we are stands now. Thank you.
Thank you, Tagaya-san. Tobias, do you see, the carbon trading is already existing in Europe. Do you see, what trends and trading volume in this trading? Can you share the, current conditions with us? Do you see any potential trading in Japan too?
I don't have any statistics for you, but I think it's very apparent that the cap and trade system in Europe has garnered a significant amount of attention over the past few years. The market's been around for, I think, nigh on 10 years now, probably even longer, probably even 12 years. But we've seen a significant uptick in price over the past 6 months, perhaps a function of the tightness that we're experiencing in the fuel market abroad. But it's expensive to burn coal, it's expensive to burn gas, and prices are going one way. I mean, this November we've got the COP conference in Glasgow. This is the #1 topic that is hitting every industry across every sector, especially oil and gas producers and power generators. China's launched a cap and trade system just last month, although that is still a closed market. Within the first day, that's now become the largest cap and trade carbon market in the world. California has the same. And then we now have renewable certificates, and we've got voluntary credit markets emerging in every corner of the globe. So corporates have a responsibility and feel now they have a responsibility for an ESG. All the generators are getting a lot of investor pressure to ensure that they are either implementing a carbon neutral plan or at least working to offset and or work towards a greener and cleaner future. So this market is going absolutely one way, and it's not going one way for 5 years, it's going one way for 20, 30, 40 years plus. And given the significant commitments that Japan and other countries have made, it's going to form a very, very big part of the commodity market sector, to use one of the better words. How's Japan going to adapt to that? It's very, very, very early days. METI have now have tabled a carbon credit style product. There's also internal carbon pricing going on in Australia in corporates in Japan, who are trying to now but trying to identify the impact of a certain carbon price on their activities. So it's very, very early days for Japan. You can look at voluntary markets. You can look at trying to emerge a domestic market. Where it goes from here, I do not know. I think there's still a lot of question marks that need to be answered, but it's going to become a critical part of the evolution of Japan.
Thank you, Tobias. David, can you share your view on this carbon trading as well, please?
Sure. I mean, if you look at the target set for decarbonization by 2050, one thing that people often overlook is that the declaration is for net carbon neutrality, not absolute carbon neutrality. So what that means is that there's still going to be carbon emissions. The only way that Japan can achieve its 2050 target, I think, is by some form of carbon trading. There may be some carbon sequestering as well, but you're going to need to have that kind of mechanism to offset and reach that net neutrality level. The other thing that people kind of gloss over is that in the energy transition, the operative word here is transition, meaning that Japan, like all the other industrialized countries, are going to be having to live with traditional fossil fuels alongside with renewables for the foreseeable future, at least 10 to 20 years out. Even METI itself admits this in their outlook for 2030. If you look forward to the year 2030, coal will account for almost 20% of Japan's generation fuel needs for power generation. So all of this means that somehow, some way, you're going to be seeing some kind of carbon trading that will be done in Japan out of necessity just to meet those targets. Thanks.
Interesting. Thank you, David. Joey, do we have any Q&A? And if not, I think from panelists, do you have any topics or comments you want to raise in discussion? Personally, I think I'm interested in to know what would be the attraction and improvement we are looking for in Japanese commodity and any opportunities in overseas in Japan. What would be the highlight? Can you kind of share your view?
Bruce, very quickly. Bruce, are you seeing much parallel with the evolution of precious metals and base metal markets in Japan over the past 20 years in the power markets? Like, are you seeing a bit of a parallel as to about how people are thinking?
Well, we have a very long history, right? So I think especially precious metals market, I mean, base metals as well, it's very matured market. You know, people know the risk and people hedge the risks. But still, because Japanese futures market is mainly the general investors market, they were the biggest power. And because of that, the price is usually a little bit higher than the international, I mean, the price it should be. So I've been trading like 35 years, the gold, platinum, silver, palladium. And most of the time, we are a big short in the futures market and big long in the spot market. And we are up against the general investors. We are giving the liquidity to the market. And like I just looked at the price today. Gold is also like 3-4 yen per gram premium. So that's okay. But platinum, a week ago, it was like 50 yen or 60 yen premium, which is like $15 premium over the spot local Zurich market. So that is, you know, it's a shame that not many foreign traders would trade on that kind of spread. Well, as a trader in Japan, I was very happy that I, you know, kind of had it all. But there is a chance. And I think one thing that the exchange could do is it's more like, you know, make it easier for the foreign houses, you know, get into the market, because there was some, you know, kind of non-tariff barriers there. You cannot easily make or take deliveries into the market into Tokom at that time. So to make it easier, I mean, to do those things like that we can do in Japan, I mean, like from Hong Kong, Singapore, New York, London, if they can do it, they would surely participate into this market. So I think for the exchange, it's still a very good chance to, you know, have a more participation from overseas.
Thank you very much, Bruce. I think it's a good news that we have potentials and many trading opportunities in Japan and overseas altogether. Thank you very much for the panel discussion. Unfortunately, the time is running out. So I think this session will be ceased at this moment. Return to Joy, can you?
Yeah, thank you,
Okay.
Chika, for moderating the panel. Yeah, it was very insightful. I'd also like to thank Tagaya-san, Bruce, Tobias, and David for sharing your views on the latest development of commodity derivative trading in and out of Japan and the arbitrage opportunity across the region, from energy, metals to the upcoming carbon trading. Also, thanks to the delegates for participating. We hope you enjoyed the session. Next, we'll have a short break and we'll reconvene at 5:30 p.m. Japan time, 4:30 Singapore and Hong Kong time for the panel discussion on financial derivatives. So we look forward to seeing you shortly. Thank you again for the panel.